Per usual, everything on this channel is for educational purposes only and is not intended as financial advice. It's Teaching Tech Tuesday. Let's take another look at seasonality being the beginning of the year here. I've talked about seasonality a few times, but seasonality is defined as predictable, that's the key word there, changes that occur over a 1-year period in a business or economy based on the seasons. Sell in May and go away, obviously probably the most well-known mantra of many market participants. I'll link the previous seasonality video in the description of this video. But again, just to quickly rehash, in legacy, sometimes based on the calendar, there's market structure or plumbing issues. Obviously, tax is a big concern. Earnings season and blackout periods will affect seasonality. You've got the passive investors that are DCAing biweekly into the things like the S&P or low-cost index funds. Corporate buybacks as well, along with earnings season, tend to have an effect during the same time of the year throughout the calendar. And obviously weather, if we look at commodities and natural gas and the polar vortex, whatever's going on here in the United States, you can generally expect supply and demand shifts or changes at specific times of the year. On the crypto side, the most obvious seasonality effect that we've seen is Bitcoin halving, which we just lived through and stayed true to form, was not priced in, was not front ran, was not XYZ, was not blah, 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 blah. We can go down the list. We saw significant price action before and after. It was certainly part of the narrative leading up to ETFs. And it'll be part of the narrative in the bear market at the beginning of the bear market. When people are looking at time relative to halving, it's typically price has topped out a year-ish after halving, a year to 500 days after halving. We also have some more like intraday stuff happening with time zones, especially with crypto, because it's 24/7. So it depends if something's going on in Asia and whoever's awake is trading Asia, right? Or Europe or whatever. US time zone is obviously dominant, but that's going to affect things throughout the day. And when we're talking about ETFs specifically, creates, redeems throughout the day, the beginning of the day, the end of the day, the middle of the day, that's going to change things. Miners and exchange listings have had an impact over time, but less so recently, I'd say. I think miners are going to have a big impact flows wise in a bear market, and any business with a corporate treasury is certainly going to have an impact in a bear market if they're selling. Looking at the quarterly returns for BTC and ETH, generally in my head, Q1, Q3, not so bullish for BTC. Q2, Q4 is where you see the bullishness. We obviously just finished Q4, and that was true to form in that it was as bullish as you'd expect. December closed red, but the quarter was still green. One thing about seasonality is you need the data to look back. You need, ideally, we're talking like 20, 50 years. Look back. We'll take what we get, obviously, with crypto, but it's important to remember we don't have 100 years of data to look at here like the S&P. So really over the last, since 2020, it's been a different story in January. It's been a different story in Q1, where Q1 has been pretty bullish. Before 2021, Q1 was mainly negative. Something else you'll see a lot of people do is throw out the outliers. So for BTC, typically you throw out 2013 because it really skews the data in Q1 and Q4. For most alts, you're throwing out 2017 or earlier, probably. Just because, again, that's going to throw data a lot here. Here's 2017 for ETH. Just a little too crazy. But you can always look at median instead of average to help smooth the data a little bit. Really, you're just looking for a signal that's usable, right? In my head, again, Q1 is bearish typically, but that has not been the case if we look at the data recently. So do we want to fight that or not is the question. Here's the data. What do you want to do with it? Anything at all. For BTC, Q1, Q2, to me, it's typically the bullishness is into Q2, not necessarily the entirety of Q2. For ETH, it's the first half of the year typically, and you can see that Q1, Q2 rarely have had bearish periods relative to the back half of the year for whatever reason. Is that because alts lag BTC and BTC moves first? Maybe, but that's the data. It just is what it is. On a monthly basis, if we look at BTC, February, very strong, only 2 negative months. January, March, less strong on positive or negative. And then as we get into Q2 and Q3, it's a little bit more jumbled and less obvious. But February and October stick out as historically very, very bullish periods for BTC. Even when January was bullish, February has been bullish for BTC for the most part. September, of course, synonymous with bearishness, which if you sold in May is generally a good time to think about DCAing back into the market. And you can see again, sell in May, go away, May to October or something, just generally a jumbled mess. And I have some more data to look at to hit that point home. But again, the question is, seeing this in front of you, what do I want to do for February? I want to be looking for bullishness. I want to be looking and positioned for up instead of down. Period. End of story. That's historically what has happened. It's going to take a mighty feat to get me to be not bullish in February and October based on what we've seen historically. We can tease this apart further. We can go post-election years. We can go post-halving years. Whatever you want to do. I don't really care. I'm just looking at a majority of these months are green. Grug sees green. Grug goes long. It's that simple for me. And the same with October. Certainly, if anything, you're hoping, especially for September, you're really hoping for that to be bearish. Then it just makes it easier to get positioned into October to be bullish. And if you look at the median, the bottom row here, that really tells the story. February certainly sticks out. April sticks out. July sticks out. And then October, November stick out. December is kind of weak relative to what we've seen. We've seen strings of good years and good months in Q4. And this was actually the first time where we've seen September, October, November close green with December closing red. So for January, I'd keep in mind, probably going to see chop, probably going to see mostly nothing on balance. That isn't to say we can't go up or down relative to the inauguration or whatever else, but January for BTC is a more challenging period. And then when we look at ETH, what sticks out to me immediately is the amount of bearishness in the middle of the year and the lack of bearishness, the lack of red in the first half of the year. If you're green-red colorblind, I apologize. So you have to find a way to figure this out. But looking at February, March, very bullish historically. Even January, very bullish when it's bullish. So Q1 for ETH, especially February and March, generally more bullish. And if we look at the median, the last row again, you can see that a string of positives in the first half of the year, followed by a string of negatives. November usually good, but mostly ETH is not where you want to live in the back half of the year. And if we just look at the ETH BTC chart, it says the same thing. Q1, Q2, post 2017 has been more bullish than the back half of the year. Q4 especially, and it makes sense. If Q4 is this awful, typically, then you do tend to see some mean reversion balancing in Q1. Just as a control, if we're looking at something like Ripple, Ripple historically has had not really any seasonality whatsoever, not really much to realistically expect. Oddly for Ripple, Q1, Q3 has been where it's at. Now Q4, when it does have a positive year, tends to be enormously positive on Q4, but you don't really have enough data here. There isn't really a pattern per se. It's just kind of a mess. So for something like Ripple, even Solana, probably similar, there's just not enough data to be certain that any seasonality exists there whatsoever. So if we look at BTC last year relative to the average, we were about on par with what you'd expect. We slow down in the middle of the year, we reaccelerate October towards the rest of the year. And in the beginning of the year, we kind of struggle to get out of the gate here and really don't get moving until February, which would be post-inauguration. I've seen a lot of people post bullish ideas into the inauguration, followed by a bearish rollover post-inauguration. That's certainly possible, but that would not jive with historic seasonality. And it doesn't have to, but it is contrary to what we've seen for BTC. And this is just from 2014 to present. For ETH, you can see that very strong effect right out of the gate in the first half of the year, January to June. And then from then on, it really is kind of flat. You know, it'll do well towards the end of the year. And that's what we saw in 2024. We saw a strong early start, and then it just went flat with BTC, and then it picked up again. So it's always interesting to me to see it ahead of time, what the seasonality is, and then actually live through it, trade it, and understand like, yeah, there's a reason, there's an effect here for whatever it is. There's a reason. So seasonally for ETH, again, the first half of the year, I can't say that enough as far as expectations for ETH. Litecoin's another one you can do this with just because there's enough data. 2014 to present. Litecoin kind of similar on average when it's bullish. Typically that's April to July, and then October, November towards the end of the year. Most of these charts over time generally point to you don't want to be sitting in this stuff in the middle of the year if you're actively trading, or you want to be trading less to the long side, more towards cash, more towards the short side, looking for dips rather than looking for rips in the middle of the year. Another way you can analyze this stuff is say, okay, what's a reasonable expectation 6 months into the year? And if, for example, on Litecoin, we hit that expectation, that 40% move 3 months into the year, 4 months into the year, is it reasonable to continue to expect the same glide path towards the middle of the year, right? So for instance, if this year we are up 40% in March, whereas typically for Litecoin, we see a 40 to 50% eventual move towards the middle of the year, maybe that's good enough, right? One way to think about this, and if we look at Bitcoin, what do we typically see for BTC? We typically see a 40% move at some point into August, and then we wait for Q4. So if we, for whatever reason, saw a 40% move in February, kind of like we did in March, right? We did nothing. Does that align with seasonality directly? No, but it does align with expectations in that we typically don't go much higher than 40% until Q4. It just so happens that we hit that 40% level very quickly and then stalled out until Q4. Before I go any further here, let me mention today's video sponsor, Kraken Pro. Kraken Pro is a complete overhaul of Kraken trading experience with a one-stop shop for advanced and professional traders. Kraken Pro enables efficient trading execution across multiple markets with a UI that allows for unique optimization tailored to our trading style. You can check out Kraken Pro at the link in the description of this video. Not investment advice. Crypto trading involves risk of loss. Cryptocurrency services are provided to U.S. and U.S. territory customers by Payward Ventures, Inc., PVI, DBA, and Kraken. And at this point for BTC, I feel like I've said this a couple times this week, you could tell me anything. And I'd believe you as far as what you'd expect here. We, on the technical side, have a hard time analyzing something that breaks out like it did and then gives it all back and then some, aka bearish engulfing today. I still think this idea is on the table. Now, you would hope that once we breached the 100 level that we would have held somewhere near the 100 level, but we didn't do that. We also are risking this bearish GK cross. So we're at this very weird time where seasonally we don't get much help here. And the technicals feel like they just want to roll over. They really do. Anything above 100 has been sold off for whatever reason. We've had news, we've had dollar strength, volatility strength, whatever you want to think about that as. I would have liked to see this hold 100, and then I'd be more confident that we'd reach for this 125 level. It's just hard to see that here. Another possibility, like I kind of mentioned yesterday, is we get this inverted head and shoulders here and we just mess up everybody. And as I get bearish at 94, 93 again, that's the bottom. And it's a very, very tenuous place to do much of anything with confidence here. Good news is we're still in the range. Bad news is we reclaimed a bearish idea. That's how I'd say it. So this is still on the table. If we break 93 sometime in Q1, I like 80. I think that's about as far as I could go with it. It's hard on timing here, but ultimately, if we get a bearish DK across with price in the cloud, that's enough for me as a high confidence idea. One other thing you might see relative to seasonality is based on futures rolls, options rolls, especially now that we have options on the ETFs, we may get these weird effects where we sell off or have this exuberance into these quarterly futures, monthly futures, whatever it is, periods. And it's just something to be aware of. In 2015 to 2018, we saw this on the on the futures markets, where we'd get this cyclical top, bottom, top, bottom, top, bottom. January 2018 ended up being the top of that cycle. I don't think we have anything quite this stark yet, but it wouldn't surprise me if something like this started to emerge relative to options expiries. Back to the sell in May and go away idea, Jeff at Bitwise looked at this, looking at longing October and April versus May and September, May through September. And unquestionably, the better long is October through April by a wide margin. Absolutely smoked the returns from May through September. So if I'm setting up my year in my head and I'm thinking, okay, what do I want to do? I want to have a long bias generally, broadly, until May. So sell in May and go away is still in effect here. And it says you don't come back until October. That's hard to do in practice, but it's important to remember maybe you don't take as big of a position in whatever in this generally dead period, May until October. Certainly something to keep in mind this year. Something else that isn't quite seasonality, but it's good to look at forward performance and to compare is post-election forward performance. Historically, we've seen very bullish post-election periods. You can say this is liquidity. You can say it's money printing. You can say whatever you want. We've seen it. So it's hard for me in the face of this to see perfect bullish periods, 3 months, 6 months, and a year after the election, to generally be bearish on that. And yes, this does align with halving. These are post-halving periods. So until this breaks, it's hard to be bearish in the face of that. One other plug I'll make for the legacy side would be the equity clock. They do these charts. They keep these updated. They look back on 20-year periods. And a lot of the seasonality we see on the crypto side is because of the correlations we see, the legacy and the legacy seasonality. So looking at the S&P, does well in February up until mid-February, gives it all back and really doesn't get going until mid-March. Does really well until mid-May, then kind of chops around. Still does decently well in July. July, a very strong month seasonally for the S&P. So sell in May and go away, not quite as strong historically for the S&P, but you've had 20 years to see that effect. July until October, flat. So again, that Q4 correlation with seasonality certainly into effect. If we look at the US dollar relative to the S&P, you see a lot of that here. You see a lot of volatility. You see a lot of dollar strength come into play in September, in February. But generally, the direction on a relative basis has been down, especially in Q2 and Q4. And that's where, in my head at least, crypto tends to do best. You can also look at the VIX seasonality. VIX spikes a lot later in Q1, settles down into Q2, spikes a lot again in Q3, September period, settles down in October onward into the end of the year. So it makes a lot of sense. If crypto's a risk asset, our seasonally strong periods will be Q2, Q4, just based on that. And then finally, the last two people I'll mention, Ryan Dietrich on Twitter and JC Peretz. They both post a ton of great charts generally, but also a lot on forward performance and seasonality. Definitely give them a follow if that interests you. That's all I have for this one. Like, dislike, comment, share, subscribe. Happy trading.